Are you in the market for a home right now? First-time home buyer, but a little bit nervous because there's tons of these crazy cash offers out there that are just getting accepted? Stay tuned because today we're going to give you some of the 5 best tips for being a first-time home buyer and how to beat out those cash offers.
I'm Bobthebanker. This is Katie Zarumsky with Zarumsky Real Estate Group. At this point in time, do us a favor, subscribe to our channel because we do videos how often?
Every week.
That's right, each and every single week, and we'd love to see you on a regular basis. We're going to jump right into those 5 first-time homebuyer tips. Actually, they're pretty valuable for anybody, right?
They really are. Whether you're a first-time home buyer looking for a vacation home or an investment buyer, these will help you out.
We broke down the home buying process into 3 specific types of modules, really. And the first one and foremost is what?
The foundation. You have to get your finances in order. Really what you have to do first and foremost is figure out what your net worth is. Right, Bob?
That's right. Normally somebody like me who's a mortgage lender, mortgage broker owner, what have you, mortgage loan officer, what they're going to ask you is some really generic, stupid questions like, hey, what's your income? How much is credit? What debt do you have? And honestly, those are super generic. And for me, ultimately, the goal for all of my first-time homebuyer clients is how can we boost your net worth with your foundational prep work for the field with this home transaction, so in the future, in 5 or 10 years, you hit that $1 million net worth. And if it was a Wednesday, you might not have to do what?
You might not have to go to work that day.
That's right. So in order to figure out your net worth, if you have a Google phone, if you have an iPhone or Excel, you can literally pull a spreadsheet that's already done for you and just plug in the numbers straight away. What you're going to do, real simple, is you're going to pull all of your statements, all of your balances from your savings accounts, checking, investments, all of that type of thing. You're going to plug those figures in, and you're going to do what with your credit?
You're going to pull your free credit report because that's so important. You should know that for just your own general knowledge too.
Which leads us into step number 2, is once you have your net worth, whether it's positive or negative, your credit report, you're going to know what your score is. So what's our magic number?
Magic number is over 700.
Yes. So technically you can buy a home with like 500 credit if you want, but those terms are going to be total garbage, and you're going to be spending way more in overall debt exposure or overall interest, and your interest rate's going to be way higher if you have a credit score that's less than stellar, let's call it. Now that we know what our net worth is, now that we know what our credit score is, if you do not have 700 or higher, the first things first, you want to hammer out any credit card debt that you have, because most frequently paying off a little bit of credit card debt can get you the highest bang for your buck as far as boosting your credit score.
It's true. It will boost it all the way up there, and that makes it easier for both of us to help you. Next up, you have to know what exactly your budget is, right, Bob?
That's correct. Imagine that you're under contract on a house and you're just totally freaked out. You can't even
buy anything else. You're panicking because you're not sure if you have money for your closing costs, for emergency fund, maybe after.
Can't sleep, can't eat, whatever that number is, that big, colossal number, that's going to be your max, and we're going to want to work back on our budget from there.
Correct. We want to bring it down to somewhere where you're comfortable because, let's be honest, there's so much fun stuff to do out here. You want to have the funds to do it.
And not only that, if you buy a house for, let's say, $500,000, at some point in time, that money is going to be paid back. If that's too much to handle, then obviously we're going to scale those numbers down for whatever you're comfortable with.
Now, how much do most mortgage people tell you can afford?
Yeah, so most mortgage lenders will basically, just so you know, we get paid on the amount of money that you borrow, right? So, yeah, that's just how it goes. But what they're going to do is put you through a real generic debt-to-income ratio calculation.
Which is the number one reason people actually get denied.
Right. So the debt-to-income ratio is a calculation of a few different things. It is going to take your annual salary. So let's say you make $100,000. You divide that number by 12, which gives you your gross monthly income. Then a mortgage lender typically will base their debt to income ratio calculations for your approval based around 45% of your gross monthly income.
Now keep in mind, that's not what your take-home pay is.
That's right. That is your earnings before any taxes, deductions that are taken out. For us, ideally what we tell clients is if you can find a housing budget and payment based around 30% of your take-home pay, that would be ideal. Now that you have a little bit of a baseline of how we like to prep all of our home buyers for the field,
We're going to jump into the floodgates, what is that, Bob?
once you have the proper foundation built, the floodgates is where all of your financial preparation really turns you into a home buying rock star. The floodgates is where you actually get out in the field, which is the fun part, the emotional part.
So one thing once we get out into the field that we like to make sure our clients are well aware of is the buyer's triangle. But with the buyer's triangle, we like to make sure we're looking at location, your monthly payments, and overall features of the home, because I need your must-have list, not your hopes and dreams list.
That's right. So ideally you would get all three, but the fact of the matter is you probably won't, right? So what do we shoot for?
So we shoot for at least 2 out of the 3 in the triangle.
Yes. And the whole key in the point of the buyer's triangle is really to help figure out what not only are your wants and needs in the property, but why are you really buying, right? Because most people really decide to buy property for what reason?
The main reasons that I see when people are out in the field with me and they tell me why they want to buy a house, it's a place to feel safe, somewhere they can call their own, and somewhere that they can raise their kids.
The main key takeaway for this video with these 5 tips is honestly, the better prepped you are for the field, the better you can be in your analytics of a neighborhood, of a property. So don't feel like somebody's pushing you to the edge of just buying a home if you're not really financially ready, which is why we put together the foundation and the floodgates, which leads you to have a much better transaction. In addition to that, we do have that free homebuyer course called
The Ultimate Homebuyer Experience. So in there, you're going to find everything from a mortgage calculator, pro tips, lots of different advice on where to go and what the next steps are. And it comes with our contact information. So anytime you need anything, we're here for you.
That's right. So we have a ton of video content, all of that homebuyer toolkit that Katie mentioned. The link is in the description. Scope it out, snoop around the channel a bit, subscribe as we mentioned. And then when you're ready, I think it's the easiest thing to reach out.
Yep. Hit one of us up and we'll be sure to get you that dream home.
Yep. We'll see you on the next one. Take care.